Well, good afternoon, everyone. Sorry for the delay. We're still experiencing some technical difficulties with one of our speakers, but we're trying to get that figured out. Um, Once again, my name is Gavin Jensen. I am one of the partners here at One2One Wealth Strategies. And first and foremost, we'd like to welcome you all to our first education meeting of 2025. Before I go any further, first and foremost, need everybody to know that this meeting is being recorded. And also, for those of you that may be like me and could use some technical help, I was told that in order to further potentially optimize your viewing pleasure for this evening, if you go into the upper right-hand side of your page, you'll see where it says View. And if you click on that and select Speaker View, that will then allow you to see the individual that's speaking at that time and not everybody all the way across. If you have any questions, please throw them into um, or let us know. One other thing we'd ask as well is that if you can make sure that your mic is muted, please. That will ensure that we're able to get through our meeting without any interruptions, as we know things do tend to happen from time to time. Um, but once again, welcome to you all, those of you that are new to One-to-One Wealth Strategies and or education meetings, and to our veteran attendees as well. We always appreciate to see all of you and hope that you find value in our meeting today. Um, with that being said, let's see here. Robert, were we able to get that linked up?
No. Nope. I think Stephanie and I
Okay.
are going to go first.
Okay, fantastic. So, to lead us off this evening, in the hopes of being able to get our other guests linked up here shortly, we've got Robert and Stephanie. Robert Young is one of the partners here at One-to-One Wealth Strategies as well, and Stephanie is one of our senior vice presidents of wealth management, and they're here to talk to you and educate you more about taxes and tax planning. Robert and Stephanie.
Awesome. Thank you, Gavin. So I'm going to first preface this session by saying that every person's tax situation is unique, and some of the items we discussed today may or may not apply to your particular tax situation. There are clients who do need in-depth tax planning, such as when they own real estate or multiple businesses or have a high net worth, among other considerations. And then there are also those where at the current time, their tax situation is pretty simple. However, what we've found inevitably in our combined 30 plus years of experience is that at some point in your financial journey, tax planning will be relevant to your financial plan. So the goal of today's discussion is to provide you with general education related to tax planning. For any questions that are specific to your situation, please reach out to your advisor. So with that, Robert, we're going to get started. So if we could start with just explaining the difference between tax planning and tax advice.
Okay. Well, this is one that causes a lot of confusion for clients. And the best way I would say to explain it is when you go to your accountant or CPA, basically you're giving them I always jokingly say they're going to give you tax advice and they're going to do tax preparation. So it's the old, you give them the big stack of papers and then a few weeks later produce a tax return for you, right? That's what you think of. And they can answer questions like how much should I withhold on this, or, perhaps you have a business, that sort of thing. The difference is when you come to us, we don't give tax advice. Okay. So we're not CPAs. So when you come to us, we can assist you with tax planning. What does that mean? I think there's several areas that means. One is tax planning would really looking at their overall financial picture, looking at your income. So this can include looking at which tax bracket they're in, right? So if you're in a high tax bracket, maybe you'll be in a lower tax bracket later. Well, perhaps we might want to have you defer the money into a 401k or IRA or other tools. If you're in a lower tax bracket now, maybe we're going to use Roth accounts, Roth IRAs, Roth 401ks. Another thing that we would look at is things like IRMA limits, which your IRMA limit is your Medicare taxes. So a lot of people don't realize that Medicare, depending on how much you make, you may pay higher and higher taxes on it. That's a big deal. And that means you'll pay higher premiums, on your Part B and your Part D on it. Many of you may have experienced this. We want to look into things like, or if you have, a lot of people, especially now that are retiring, have been putting money away in their 401ks, 403bs, their group plans for years. And so what is going to happen is we might want to look at converting that to a Roth IRA. Okay. And we'll talk about that a little bit more shortly here. And then the last one is things like that they don't even know about, like their net investment income. So if you have investment income that is not inside of an IRA, there's an additional tax you pay besides the capital gains if you're over a certain threshold in income. There's a lot of little surprises. I would add this, Stephanie. I remember years ago, I was doing a meeting for a bunch of employees. And at the end, people were coming up and talking to me. And I remember this gentleman came up to me and said, "Boy, that was fantastic. I learned more at that thing. I wish I would have known about this when I first started. But now that I'm retiring, I don't need an advisor anymore." And I said to him, "You need an advisor more now than you ever did because there's a lot of things that you don't know about." And this is taxes are one of them.
Taxes are one of them for sure. So what's the difference between an accountant and a financial advisor for tax planning?
So I think when I got in the business, the biggest thing somebody once told me is, and this is no offense to, there's a lot of really good CPAs and accountants. We refer to some, is they're kind of like a historian. So they're going back and they're taking your information and they're telling you what happened last year. And there's not a lot you can do about it. How many times have clients come to us in January and February and said, "Hey, I'm preparing my taxes. Is there anything I can do for last year?" And other than maybe putting some money in an IRA if they can, not a lot,
Right.
right? And I'll jokingly say, hop in a time machine, go back to last year and start doing tax preparation, right?
Yeah.
Or tax planning. Um, when you come to us, we're actually sitting down with you and we're actually putting together and formulating a separate tax plan to look at all of these things and prepare in advance.
That's a great explanation. So what are some key items to consider when it comes to tax planning?
Well, I would say that the obvious ones would be, for those of you that are still working, continuing to defer money into your 401ks, or if you're in, let's say, you work in a public education or firefighters, that sort of thing, police officers, 457 plans, 403b plans. Maybe you make a Roth contribution if you're in a lower tax bracket. It could be if you're retired, maybe it's Roth conversions. Actually, you don't have to be retired to start looking at Roth conversions. Many times it makes sense while you're still working, depends on the situation. We would, key items would be things like finding places to lower your overall income, what's called your modified adjusted gross income, and that will affect your Medicare premiums in a positive way. So I mean, those are just a couple key items. There's a lot.
Yeah, absolutely. What are some things that most clients miss when it comes to tax planning?
A whole lot, a lot of things. My daughter is a freshman in high school, and I said, her name's Autumn. I said, "Autumn, do you have any classes on how to learn about taxes or finance?" She's like, "Well, I think when I'm older, maybe finance, but not taxes, Dad." And I thought to myself, well, yeah, because it's not something we typically learn unless you go to college and you want to become an accountant, you take accounting classes. And even then, it's questionable. But I would say, I mean, I'll just mention maybe two or three that would be big ones. One of those is that your investments in your income can actually, if they're doing well, many times can affect your Medicare premiums. And where they had a lot of money in savings, and we just had another client like that today, right?
Yep.
That the money that they were getting from earning interest in their savings account was causing them to pay more in Medicare premiums. It was creating a net investment income tax problem. So it also increase their marginal tax bracket. So there are ways to reposition that where you can either eliminate or um, at least reposition it so we can reduce that. I think it's a big deal. Another one I would say is that well, I kind of mentioned it, is just repositioning your investments so they're maybe heavily focused on long-term capital gains instead of short-term capital gains. A big one that our team does for any of you that are with us and you have investments that are non-IRA investments, what's really great about that is in those non-IRA investments, we do what's called tax loss harvesting in there, and that may save you money as well. And I think the last one would be when you say, what kind of things you need to do when it comes to tax planning. I think you and I both agree, start early, right? Like try to do your tax planning with your advisor in the beginning of the year. Don't come to us in December and go, okay, got 3 days left in the year. What should I do? Right, let's do it early. The longer that runway is, the better off you are.
Perfect, thank you. Could you provide just a quick overview of the taxes people pay that they may or may not know about?
Well, I think the most obvious one that most people know about is they look at their paycheck or their Social Security or their pension, and they look at their marginal tax bracket, right? They look at what's coming out, so their federal and state taxes. And that's really what most people key on. When they think about, oh, the government's giving tax cuts, that's all they focus on. But they don't realize that there's other things like there's capital gains. So if you own real property, like real estate of any sort, and you sell that, there's capital gains on that. And there's long-term and short-term capital gains. You pay taxes on dividends. Okay. You pay taxes on, well, it's kind of a tax, right? Medicare. So
I think so.
Medicare, the more income you have, the higher your premiums are. And I think a lot of seniors that are turning 65 don't realize, well, wait a minute, what do you mean I'm paying more than this other person for my Medicare? I'm not getting any different Medicare than they're getting. No, but you may have a higher income, and that's going to increase your Medicare, like the one we talked about today, where it was going to go from 175 to almost $500 a month, right? Okay, there are things that we can do when we're planning to lower that. So that's a big tax. Net investment income tax, that is an extra 3.8% that you pay on top of your capital gains tax if you're over that. Many times we can eliminate that and shift investments around, things like that, to reduce your adjusted gross income and lower that.
I think there's one more, estate taxes.
That's a good one.
Yeah.
Estate tax is a big one. And I think, the example that I like to use all the time is, okay, so we take Stephanie Schultz here, and she's gets out of college one day and, like all of us, the only thing you own is pretty much the shirt on your back and a couple of frozen pizzas in the freezer, right? So you're not really worried about the estate, right?
No.
Your whole estate is Stephanie Schultz, right? Whatever you own. And then you start to build up assets. And one day you get to retirement age and you have a lot of assets. So now what ends up happening is it becomes the Schultz estate, and you have kids and you have maybe grandkids down the road. Or now you look at this and say, well, how can we maybe reduce the taxes for the estate for future generations? Maybe you're going to pay a little bit more in taxes by doing this, but it reduces the taxes for the estate for the lifetime of the estate, which is as long as your family continues on, which could be generations into perpetuity, right?
Absolutely.
That's a big deal.
Yeah, you get to leave a legacy.
Yeah, how great would it be to, we talk to people all the time, you're going to leave money to your kids or your grandkids or whoever. Why not leave it to them as tax efficiently as possible?
Absolutely, 100%. So do clients still need to see their tax preparer?
Some question we get all the time. We don't do tax preparation. We just help you out with planning. Absolutely. If you're one of those that uses TurboTax or a similar software or something like that, and it's easy, then you keep doing that. That's not what we do. But if you're working with a CPA and accountant, absolutely. I just saw a situation. I've had a number of clients who their CPAs had retired, or I had one the other day, I think. I don't know if you and I were working on it, where the CPA had passed away.
Yeah.
And with no succession plan, by the way. And in that particular case, you can call our office and we're happy to refer. We have several different firms. We'll refer you to several, and you can interview them and determine who you want to work with.
Absolutely. So what can clients do to be proactive?
Well, a lot of things. I think the biggest thing is anybody that's on this call, if you're listening to this and you're saying to yourself, wow, you know what, is this me? And you're not sure, I would say send your advisor an email and say, I listened to Robert and Stephanie talk about taxes and tax planning. Is this something I need to do? And they're either going to tell you we're already doing it, you don't need to do it, or absolutely, let's get in here and let's get this done.
Perfect. Is there an additional cost to do tax planning?
There is. So one of the reasons that we left our old broker dealer and came over to LPL was that we could add all these additional services: enhanced financial planning, tax planning. Well, tax planning takes, how many times have you and I spent hours doing tax planning for one client? And it's a team, it's not one person. Our team might consist of 2 or 3 different individuals that are spending hours of their time. Then they have to meet with the client to go over it. And then after the clients agree that these are the things we should do, then we have to implement on our side. That's hours more. So there's a cost to it. Now, unlike your attorney, and if there's any attorneys on the call, don't take offense to this, where they just bill you hundreds of dollars an hour and you pay a big bill. we will typically tell you, hey, here's what the cost of doing this is, and that's what we stick to. But it's based on the scope of work. Okay. Again, I jokingly say, unlike your auto mechanic, we're not going to get in there and go, oh, gee, you know what? There's something wrong with your transmission too. And we can typically give you a number and say, hey, to do your tax planning, here's what's going to cost. And each year it's going to be different. Some people think, well, the first year there's more work. No, sometimes in subsequent years, I just had a client who sold their business, sold it. I've had a client that just told me the other day that they sold two of their houses to their rental property. So all those things make a difference. And each year we'll just take it by the scope of work.
Sounds great. So it sounds like it doesn't necessarily matter if someone has hundreds of thousands or millions invested. Anybody might be able to benefit from tax planning.
Oh, absolutely. Absolutely.
Perfect. Well, that's all we have. So I'm going to turn it back over to Adam.
I think we're going to turn it back over to Adam. Correct.
Actually, I think it's going to come back to me because we've got the technology fixed and we've got our guest with us now. So, hey, to the both of you, thank you very much. That was very informative and insightful as well. And once again, any of our clients that have any questions, please be sure to reach out to us and or to your advisor, and we'll be more than happy to ensure that they get back to you and answer your questions. But for now, what I'd like to do is move from the tax planning side because I'm sure a few of you have questions with regard to what's happening out there in the markets. And once again, for all of you on the call, or the meeting with us, if you wouldn't mind making sure that you're on mute, please, so that when we bring our next presenter up, that they'll be able to go through their information as well. And so with that being said, our next guest is John Lisher. He is the portfolio manager of the PCS team and the manager of the team that watches over our portfolios. Just to tell you, we are in constant contact with him, but I think at this point, what I'd like to do also, due to time, is go ahead and turn it over to John to provide us with a high-level overview of the markets as of from what we're seeing today. Welcome, John.
Hey, thanks, Gavin. And yeah, thanks everyone for taking the time and having me here today. Yeah, like Gavin said, my name is John Lisher. May have heard my name, maybe not. But we work closely with the guys to basically we meet fairly regularly, quarterly and even monthly, and sometimes more often on the models, looking at investments, looking at economic outlook, making sure that they're well prepared to talk to you about markets. And so, I'll be brief. I know we have a lot to cover, but I will go over, kind of a market outlook for 2025, what we're seeing, where we're hoping things go. Maybe talk about the models a little bit, just kind of briefly, and then just a little primer on our focus, which is long-term investing. So I want to speak, just a little bit about kind of what we look at in the global economy when we're making portfolio decisions. And so my team and me specifically, I'm a macroeconomic first kind of guy, and so the big variables I look at any given time, as new data comes in, things change, but for the most part, it's inflation, interest rate outlook, unemployment, and GDP or gross domestic product. And so those are really the big drivers of the macroeconomy and also stock returns, bond returns. It's all pretty interconnected to the macroeconomy, US and globally. And so, right now inflation is coming down, quite a bit since 2022. And of course, we've had interest rates rise. The Fed making those decisions has led to that. And so, right now, the Fed has, I don't know if you've seen this in the news, but the Fed has paused their interest rate cutting cycle. We actually expect 2 to 3 interest rate cuts from here in 2025, hoping for and sort of ultimate terminal rate of around 3.5%, maybe a little lower out of the next couple of years. We'll see how things go. Um, Unemployment is holding steady at 4.1%. It's been right in that range for quite a while. So I don't know if you've seen things in the news like like stagflation worries or inflation coming back up, but economically we don't see those issues. The Fed has a lot of room to run with lowering rates if they need to, if that unemployment rate kicks up. But right now, the U.S. economy in particular is doing quite well from from a output GDP markets perspective. 2025 overall outlook, we expect it to be pretty positive. We're coming on 2 consecutive years of double-digit returns. Yeah, that's not something that happens very often. And so, I'm cautious to say that we'll get a third year of that, but as of right now, and of course, it's still very early in the year, but as of right now, the economics are looking very, very positive for another solid year in markets. Of course, there's always hiccups along the way in a given year, but we're very focused on the long term when we choose investments and build models. And so I'll maybe transition to long-term investing. There's a saying that goes, time in the market is better than timing the market. And so that's kind of the words of wisdom that we live by when we make investment decisions. The news may, I hate to bring up the news and politics, but it is front of mind these days. The news is just it's just overwhelming what can come out. All of the different stories, anger and whatnot in the news. We take pride in kind of distilling that, looking at actionable things that come out of the news. Kind of what's really happening, reading the actual policies in real time, how they'll be affected. And so, I would say that overall, it can be a scary time to to be watching the news and what's happening on the political front. But we don't expect that to really be a long-term driver of portfolio issues or even economic issues. We expect volatility to increase, and we've seen that. But as much as the crazy stuff has happened over this year so far, the market, the S&P 500, for example, has stayed basically flat. Maybe it's down a little bit, but not by much. So while volatility increases, looking at the long term, we're still in very good shape. When it comes to the models themselves, Robert, Adam, and Gavin and I, we meet, fairly regularly to discuss the model lineup, what's working, what may not be working. I don't anticipate any changes, at least for the next, few months. We'll see. We'll see what happens with rates and the economy at large, but not really much in the way of model changes coming up. And yeah, just I think I'd emphasize that if anyone is worried about what's going on in markets, I would say please reach out to your advisor. And if they can't answer it directly, I'm one of the primary researchers on this team, and so we are very in tune with what's going on at a policy level, what's being said, and all of that, and we have quite a bit of a deep bench of research capabilities, and we can get what I hope is pretty good answers for those kinds of questions. So I think that's about it for me. I'll turn it over to Gavin.
Excellent. Thank you very much, John. And even with your technical difficulties, we appreciate you having us or having you join us. It always helps out as far as getting a better understanding. And yeah, there's been a lot of news that has come out lately and a lot of questions that have surrounded it. And we appreciate you making this a bit clearer for us as well. Adam, Robert, did you have anything that you wanted to ask or add to that as well?
No, John is a great resource, and we have a full team with John as well as our team. Always looking at the markets. So if anyone has questions, please don't hesitate to reach out. We know, as John mentioned, there's a lot of news out there right now, and we're always happy to chat with you. This is your time to please always email us after this or chat with us. We're always available.
Excellent. Excellent. Well, everyone, we'd like to once again thank you for joining us. And before we leave you this evening, I will pass it on to our other business partner, Adam Carlett, to go ahead and close us out.
No, thank you again for all of you joining us this evening. We know how busy life can be, and we truly appreciate you taking the time to be here. We hope you found tonight's seminar valuable and walk away with some useful insights. If you have any questions or want to dive deeper into these topics discussed, please don't hesitate to reach out, as we mentioned earlier. You can call the office or email your advisor directly. They're all on this event tonight, and we'd love to chat with you. We're excited to continue these quarterly seminars. We're restarting these. For those that have worked with us for a long time, we used to do these all the time. So we're excited to get these going again, and we're going to cover new and relevant topics each time. Our next session will be in April, and we'll be in touch with you as soon as we finalize the date and topic for that seminar. We look forward to seeing you then. Once again, thank you for your time, and we hope you have a wonderful evening and a great rest of your week. We appreciate you.
Thank you, everyone.